Good morning, welcome to the Phoenix Blue update for Wednesday the 31st of August. I'm Tom Colley and I'll talk you through the news in the markets this morning. And as usual, we'll start with the news. Relatively quiet news day yesterday. Overnight, we'd had some good numbers for building approvals from Australia, although the Aussie is so far this week certainly been the weakest currency against the US dollar, so actually had little effect. We saw some good consumer confidence figures out of the States yesterday afternoon, which gave us an intraday bullish move, but in their own right, come ahead of this non-farm payroll week. Non-farm payroll obviously on Friday, so anything will be somewhat diminished in the light of that. Looking forward to today, 1:15, we have the ADP non-farm employment change. This isn't the main one that comes on Friday, but certainly interesting to watch. Gross domestic product on the Canadian dollar, and crude oil inventories out of the US, which is always interesting, has been for a long time, and give us an indication of stock holdings of crude oil in the States for those looking at trading crude today or later in the week, something that we'll be looking at in a minute. Also overnight we'll see two lots of manufacturing data out of China, which is about the most significant data that comes out of China. Why? Because China is a manufacturing country. Industrial production is where it generates its income. It's a huge exporter, etc., etc. We have the official government figure that's out at 2 a.m. and then we have the privately generated figure from the organisation called Cakesin, which is due at 12:45 and is the one that tends to be the better one to watch. Now in both numbers, anything, or in both cases, any number above 50 is considered expansion, anything below 50 is considered contraction. So you can see both of them really are bouncing around 50 at the moment anyway. So we'll be looking for any variance around that. Also overnight, capital expenditure, private capital expenditure from the Aussies, and also retail sales. So again, something to be aware of if you're trading the Aussie, which is something I'll be talking about in a moment. Okay, we talked about Chinese manufacturing. We haven't had a look at the Chinese stock exchanges for a while. You will note this is the China A50 stock exchange. We've previously looked at the Shanghai Composites. Unfortunately, my source for that information has dried up. But as we don't trade this market, we're only looking for an indication of how the market's moving, not the end of the world. So from now on, I'll be looking at the A50, which is the top 50 Chinese companies. Things to note is we've recently had a year high at the top, this level here, the top of what I've got marked in as a channel. We're currently below the level below that here. Looks like 9830. So this will be interesting to watch in respect of those manufacturing numbers, because as we can see, since the beginning of the summer, let's call it June, we've seen somewhat of a recovery in Chinese stocks. Over on the US dollar, well, we've clearly had a bullish week, or certainly bullish yesterday. Really strong move through to the $96 level on the dollar index. Now what's interesting here is $96, it's a big number, but it also comes through the apex of the triangle formation, sometimes known as the point of control. And I've mentioned this before, but basically a triangle shows increasing indecision as the market contracts around a point, which at this point is 96. We're seeing it sat on 96. I'm thinking that it's going to be sit pretty close to 96 until the non-farm figures on Friday. And clearly showing that the market is still indecisive, although we've had a bullish move through here till we break that 96 and close above. The market is still right at the point of indecision. Now, one of the things that coming into non-farm payroll on Friday is that expectations, I think, are relatively high for this number. However, what I read yesterday was that the forecast figure, or the forecast, has been missed in August for every one of the last 5 years. So we may see that continue, and we may see a fail to hit the projection. Now that would fall into a pattern, or a seasonal pattern, because going into September, or through September, the dollar index is in fact seasonally bearish. So we may see that play out. Those two things together suggest that's a possibility, but obviously we won't do anything until we've seen non-farm payroll numbers out on Friday. Over on US dollar JPY, the yen, well, where we had the point of control in the triangle for the dollar, we've got a clear level through here at a trend line stroke channel there. If we get those non-farm payroll numbers through good, or through strongly, we'd expect to see the dollar index going long, and also we'll see a breakout above this, and we'll be looking to add into this market because we're already in this market around the 99.90 level from last week, or maybe even the week before. No, I think it was the end of last week, and we're looking for a break above this level here, and then we'll look for price to pull back around the 103.50 stroke 103.70 level to take on to the long side. But I'm sure for that level to break, it will require those non-farm figures to be strong. Over here we have the US dollar CHF, the Swissy. Now, similar to the US dollar, we've got a triangle formation, but in this case we're above the point of control, which is around 0.97 in this instance, where we've got a level of support stroke resistance. Now, interestingly, going into September, the Swissy is the seasonally the bullish, the most bullish currency of all the currencies that we trade. Now, bear in mind that a bullish move on the Swissy, because it's inverse its US dollar CHF, is to the downside. So what I'm actually looking for here is certainly, particularly if we get poor non-farm payroll figures and we don't get the dollar breaking to the long side, is I'll be looking for an entry short here to take advantage of that seasonality. So if we get the dollar in a bearish move and the Swissy in a bullish move, we've got the potential for a nice considerable move, certainly down to the lower side of both triangles, be it on the dollar or the Swissy. I mentioned a moment ago the Aussies have been the most bearish pair for me, really, over the last 2 weeks, despite it's continued a short, much stronger movement short than, say, the Kiwi. For that reason, this is one market that, although I'm not necessarily expecting the dollar to do a great deal before non-farm payroll, I am looking for an entry to get in here short. You can see those two little lines there. That's basically a flag. I'm looking for a break and a retest of that bear flag in order to take this market down to the level of about, well, it's about 0.754, and it looks like it's just looking at another screen. It's broken out. I'll let it close below on an intraday chart and then pull back in order to take the trade. Now, crude, we've got the crude oil inventories out today, so there is a trade that I'm interested in here. It's intraday. We've got a level at 46.60. I've been watching a major level at circa $50 here, where we've got resistance. We've got a longer term trend line, but at this moment in time it's not up at that level. There's a level here, it's broken that, and I'll be looking to potentially trade an intraday level through here. But I would be looking to hopefully get my risk off the table going into the crude inventory figures, or accept the risk that involves ahead of that. Here we've got the S&P. I've put it on a 4-hour chart this morning purely because I wanted to show you the last couple of days and the triangle formation we've got here. Again, reflecting indecision that basically ahead of non-farm that we've been talking about on most of the markets today. So really it's just to show you that we'll be looking for this market to react accordingly. If we get, say, poor non-farm figures and the dollar comes short, we'll be looking for the market to move to the upside. If it breaks this all-time high here, then certainly there'll be opportunities to trade that on the long side. Alternatively, we may just get a break out of the triangle and a retest, and intraday trades through to that level before we actually potentially break that level. Over on commodities, on Friday we got into natural gas. This was the bar with the entry from this level. Ignore this entry here. The reason that is that this is a futures monthly chart. So we came to the end of the September month and the chart switched. You automatically get your position closed, and I manually reopened a position that reflected the original position here, hence the opens at a higher level. But really what I wanted to point out here is this market yesterday, it did pull back quite hard. As we've mentioned before, we expect dollar strength to put the brakes on any bullish commodity move. It won't determine direction, overall direction, but it does mean that we do need to trade with bigger stops in these markets. They tend to be more volatile, they tend to be longer term trades, and we are looking for price to come above this around 3 level here to get to add into that trade as well. That will be our first target. Take profit at that level, wait for the breakout, pull back, and then that trade has the potential to run seasonally. It's bullish through to mid-December. Hence, big stop, patience, watch the trade play out. Okay guys, that's it for today, other than to say the next free trading event in London is on Friday the 23rd of September. The details aren't yet on the website, but if you are interested, just go to the contact section, tell us what you're interested in, and we'll send you the invites. The website will get updated very soon. You can also see us on Instagram at Phoenix Blue Trading, and I'm sure that we'll put out an announcement on there as well as soon as we've got round to it, in order to about this 23rd of December. It's 4 hours free trading in London. Chance for you to see how we trade, what we do, trade alongside our 2 most senior traders, meet some of our less senior traders to let them explain to you how the methods that we use have improved their trading and knowledge, etc. Okay guys, that's it for today. Other than to mention, do bear in mind it's the last day of the month. Added to the, shall we say, the pause before non-farm, we could see quite a quiet day out there. Okay, take care, and we'll speak to you in the morning. Bye now.